Until next time, keep exploring, keep learning, and keep on diving deep. All right, so today we're diving headfirst into crypto.
Yeah, buckle up.
It's a world of overnight fortunes, yeah, but also wild swings, legal battles, even the shadow of Silk Road still lingers.
Lots to unpack.
Absolutely. So we've got market snapshots from Binance, breaking news from all over the crypto world, even a press release about Netcoins hitting record trading volume.
A whirlwind.
It is, and our goal today is to cut through all that noise and give you, the listener, the key takeaways. So you can navigate this crazy crypto world. And speaking of crazy, did you see what Ripple's XRP did?
Okay.
Surged past Tether and Solana. It's the third biggest cryptocurrency now.
Incredible.
We'll break down what's driving that and what it could mean for you.
Well, and it's interesting because all this is happening while the total crypto market cap dips slightly. CoinMarketCap has it at $3.38 trillion right now.
So a dip overall, but then you've got DAH up 37%, XVG and HBAR both up 27%. Talk about a roller coaster.
It is, and that contrast tells us a couple things.
Right.
Volatility is high, but also you got to understand the individual coins, not just the overall market.
You got to go deeper.
Exactly.
So DDAH, for example, it's not just about privacy like some people think. It uses a two-tier network. You've got miners securing the blockchain, and then masternodes, they add things like instant send and private send.
Right. And those features, especially private send, mixing your coins so they can't be traced, that could be a big reason for the surge. Privacy is a hot topic.
Makes sense. Okay, so let's jump over to Ripple's XRP for a sec. 31% jump in just 24 hours. That's wild.
That's huge.
One source mentioned it hit a 7-year high of $2.80. Can you imagine holding that for 7 years and then seeing that?
Talk about patience paying off.
Seriously, but this surge, it seems to be fueled by a bunch of things, but especially all the anticipation about regulation changing after the election.
Yeah, the SEC chair resigning, rumors about Ripple's stablecoin getting approved, even whispers of an XRP ETF. It's creating a lot of buzz.
A lot of optimism, too.
Definitely. That potential for a friendlier regulatory environment, it's huge, could really change the game for crypto.
Like a sigh of relief after years of waiting. But even with the surge, XRP is still way below its all-time high back in 2018. Makes you wonder, is this sustainable or are we in bubble territory?
The million-dollar question, and not just for XRP, for the whole market. Is this post-election surge the start of something big or just a temporary Trump bump, as some people are calling it?
We need to look beyond just Bitcoin to figure that out.
Absolutely.
Like Ethereum almost 50% up over the past month. That's impressive. Is it just riding Bitcoin's coattails or is it becoming its own force? What do you think?
Ethereum's rise is definitely something to watch. The whole market tends to move with Bitcoin, that's true. But Ethereum's been building its own momentum. And there's all this talk about Ethereum ETFs potentially including staking yields.
Staking yields in ETFs. Okay, I gotta admit, I'm intrigued. Break that down for me. What's the big deal?
So staking, you earn rewards just for holding certain cryptocurrencies, like earning interest on your crypto.
Interesting.
And now imagine if ETFs included those staking yields, suddenly they're even more appealing for people looking for passive income.
Like getting paid to hold onto your crypto.
Exactly.
Okay, so we've talked about DNH and XRP, but let's not forget about those other high flyers we mentioned earlier. XVG and HBR, they deserve a closer look too.
Absolutely. Each one's got its own unique features driving its price. DAH we talked about, privacy and fast transactions. XVG, also called Verge, anonymity and security, are big there.
Right.
And then HBAR, that's the token for the Hedera Hashgraph network. Super fast, super scalable.
It shows how diverse the crypto world is.
It does.
Each coin carving out its own space, its own audience. Not a one-size-fits-all market at all.
Not at all. And that diversity is what makes it so exciting. It's dynamic, full of innovation, new solutions all the time.
But we gotta be real, this excitement, it shouldn't overshadow the risks. One of the sources mentioned DMM Bitcoin liquidating after a hack, $320 million gone.
Ouch.
Yeah, a big reminder that security is crucial.
Definitely. As more money flows into crypto, those vulnerabilities become bigger targets for hackers.
And then you've got Robert Kiyosaki, the rich dad, poor dad guy. He's predicting a major Bitcoin correction. He thinks it'll hit $250,000 in 2025, but says see a correction as a buying opportunity. Are we headed for a bubble burst?
Well, his prediction definitely adds to the uncertainty. But the thing about crypto is uncertainty is always there. You've got soaring prices, positive regulatory news. There are also warnings and security risks.
It's a complex landscape. Investor sentiment, it feels like a mix of excitement and anxiety.
For sure.
What stands out to you as the biggest takeaway so far?
I think the biggest takeaway is crypto is never boring. It's dynamic, it's always changing, and staying informed is key. Do your research, understand the technology, invest wisely.
Well said, but there's one more thing we need to talk about before we move on. The U.S. government just moved $1.9 billion worth of seized Bitcoin to Coinbase.
Oh, wow.
What do you make of that? What kind of signal does it send?
That's definitely got people talking. Some see it as the government embracing digital assets, maybe even a hint at that strategic Bitcoin reserve. Some lawmakers, and even the president-elect, have been talking about
A
it.
strategic Bitcoin reserve, that's a bold idea.
It is.
Imagine the U.S. government holding Bitcoin as part of its national strategy. What are the arguments for and against that?
Well, the people who like the idea, they say it would diversify U.S. assets, maybe protect against inflation, even give the U.S. an advantage in the digital economy. But critics, they worry about Bitcoin's volatility, the possibility of manipulation, and ethically, whether it's right for the government to hold a decentralized asset.
It's a thorny issue, no easy answers.
Definitely not.
And it highlights the bigger question of how governments are going to deal with the rise of crypto.
It's a big shift in finance, the rules are still being written, and this move by the U.S. government, it just adds another layer to the story.
It does. Before we wrap up this part of our deep dive, I want to hear from you, the listener. What are your initial thoughts on what we've covered so far? What jumps out at you? Any particular coin you're more curious about now? Share your thoughts, and we'll be back soon to keep exploring the fascinating world of crypto.
Welcome back to our Crypto Deep Dive.
Picking up right where we left off, that $1.9 billion Bitcoin transfer by the U.S. government, it sparked a lot of debate.
Yeah, two main camps, I'd say. One sees it as the government embracing crypto.
The other thinks it's just about liquidating assets.
Exactly, but here's the thing. Even if it is just about selling, the size of that transaction, it sends a message. $1.9 billion, that's a lot of Bitcoin.
That's a statement for sure.
And for the U.S. government to be involved like that, it kind of legitimizes crypto, even if they're not fully on board.
Like they can't ignore it anymore.
Right, and it ties into that strategic Bitcoin reserve idea.
Imagine that, the U.S. holding Bitcoin like it holds gold.
Bold move.
It is, and there are arguments on both sides. The people who like it, they say it would diversify U.S. assets, protect against inflation, maybe even give the U.S. a strategic edge in the digital economy.
But the critics, they point to Bitcoin's volatility, the risk for the country, if the price drops. They also worry about market manipulation and whether it's ethically right for the government to hold a decentralized asset.
Tough questions. No easy answers.
Definitely not.
It all goes back to how governments are going to deal with crypto as it grows.
It's a challenge. How do you regulate something that was designed to operate outside the traditional financial system?
And it's not just about the technology, it's the economic impact too.
Absolutely. We're seeing crypto getting more and more intertwined with traditional finance that creates both opportunities and challenges.
For sure. And speaking of challenges, let's zoom out for a second and look at the global economy. Lots of uncertainty right now, inflation worries, geopolitical tensions. People are feeling anxious about the future.
Definitely a sense of unease out there.
And in times like these, people often turn to alternative assets, something to protect their wealth. Gold's been the classic safe haven, but we're seeing more and more investors looking at Bitcoin as digital gold.
Interesting comparison.
Both have limited supply, and their value is seen as separate from government control. That appeals to people who are skeptical of traditional systems, worried about fiat currency losing value.
Makes sense. And that post-election surge in crypto investments, it could be driven by that sentiment, people looking for stability in uncertain times.
But it's not a risk-free haven. We talked about the DMM Bitcoin hack, and volatility is just part of the crypto world. Prices can swing wildly. There's always the possibility of a big drop.
That's why caution is key. If you're thinking about investing in crypto, do your research, understand the technology, and only invest what you can afford to lose.
It's not a get-rich-quick scheme. It's a long game with risks and rewards.
Definitely. Have a solid strategy. Don't let emotions drive your decisions. Crypto can be exciting, but it can also bite back.
But for those who are willing to embrace the uncertainty, crypto can be incredibly rewarding.
No doubt it's pushing the boundaries of finance and technology. And it's attracting a really diverse community, innovators, entrepreneurs, investors.
It's evolving constantly, too. New technologies, new applications, the regulatory landscape is always shifting, makes it a really dynamic space.
For sure. And that brings us back to Ripple's XRP. That coin has been on fire, #3 now.
What's behind this comeback story?
A few things. First, that SEC lawsuit that's been hanging over them for years finally settled in Ripple's favor.
Big win.
It was, removed a major roadblock, boosted investor confidence. It shows how much regulations can impact a coin's fate.
Absolutely. And on top of that, there's all this talk about Ripple's stablecoin, RLUSD, getting regulatory approval soon.
That would be huge. Could make them a major player in the stablecoin market.
Stablecoins, they're becoming more and more important, aren't they?
Definitely. A way to bridge the gap between crypto's volatility and the stability of traditional currencies. You can use them for everyday transactions without worrying about price swings.
Makes sense.
And if Ripple gets approval for theirs, it could really expand the use of XRP, make it more appealing to businesses and everyday people.
And then there's the possibility of an XRP ETF.
That would be a game changer, bring mainstream acceptance, maybe even open the door to institutional money. But it's important to remember, it's all speculation right now.
Right. The SEC hasn't said anything officially.
Exactly. It's a reminder that crypto's full of hype and speculation. I got to separate fact from fiction, make decisions based on solid research.
Wise words, but even with the uncertainty, the excitement around XRP is real. It's a coin that's been through a lot and come out stronger.
It shows how resilient the crypto market is, how much belief there is in this technology.
For sure, but XRP is not the only one making moves. Ethereum's been steadily climbing too, often seen as a rival to Bitcoin.
Yeah, but it offers something different.
Right. It's not just a cryptocurrency. It's a platform for building decentralized applications, those dApps.
Exactly, a platform for innovation, empowering developers to create new digital experiences.
And Ethereum's own cryptocurrency, ETH, it's been benefiting from all that growth, the DeFi and NFT markets expanding.
And that growth is only going to accelerate. Remember we talked about those potential Ethereum ETFs with staking yields?
Yep.
That would make ETH even more attractive.
Okay, I want to dig into Ethereum a bit more. What makes it so different from Bitcoin? Why are developers so drawn to it?
One key difference is smart contracts. Those are self-executing contracts that automate complex transactions, make it possible to build decentralized applications.
So instead of needing banks or lawyers to enforce agreements, smart contracts do it automatically, more efficient, transparent, secure.
Exactly, and that opens up so many possibilities for developers. They can create dApps for anything. Decentralized lending, prediction markets, supply chain management, even online voting.
And Ethereum's going through a big upgrade. Ethereum 2.0 is supposed to improve scalability and energy efficiency.
That upgrade is crucial for Ethereum's future. It'll let the platform handle way more transactions, reduce its environmental impact, make it more sustainable and accessible.
It's a platform with big ambitions, a dedicated community behind it, definitely a force to be reckoned with in the crypto world.
Absolutely. Ethereum's built for the long game, and its potential is just starting to unfold. But before we dive even deeper into Ethereum and other exciting developments, let's take a quick break. We'll be back soon to continue exploring the ever-evolving world of crypto.
We've covered market trends, the regulatory landscape, took deep dives into Ripple's XRP and Ethereum, but we can't forget those other top performers, D-H, XVG, and HBRR. Each one has its own story to tell.
Absolutely. They might not be as well known as Bitcoin or Ethereum, but their recent price action, well, it's got people talking.
So let's start with D-H. What makes it stand out in the crowded crypto space?
D-H, it stands for digital cash, and it's all about two things, privacy and speed. Think of it as digital cash that leaves no trace.
That's interesting. Privacy is a big deal these days. Concerns about data tracking and surveillance are growing, so a coin like DAHH, emphasizing privacy, it could really appeal to a certain segment of users.
Yeah, exactly, and they achieve that privacy through a two-tier network. You've got the miners securing the blockchain, but then there's this other layer, the master nodes, and they enable these special features, instant send and private send.
Okay, tell me more about those features. What makes them so special?
So instant send, it makes transactions almost instant, perfect for point-of-sale purchases anywhere you need speed. Then you've got private send, it mixes your coins with others, makes it really hard to trace where they came from.
Like a digital shield for your transactions?
Exactly.
No wonder DAHH is gaining traction, but is it just about privacy? Anything else driving its rise?
Privacy is a big part, but DAHH also focuses on ease of use, making it easy for anyone to use, even if they're not tech-savvy.
So they're aiming to be the everyday digital cash, with privacy as a bonus. All right, let's move on to XVG, also known as Verge. Another privacy coin, but it takes a different approach, right?
Yeah, Verge uses multiple layers of privacy. It uses things like Tor and I2P, these anonymity networks that hide your IP address, making transactions virtually untraceable.
So it adds an extra layer of protection, routing transactions through these networks to make them invisible.
Exactly. Verge wants to give people complete control over their financial data, keep it safe from prying eyes.
In a world with so many data breaches, that sense of control, that privacy, it's really appealing.
It is. For anyone concerned about online censorship or just wanting to keep their financial transactions private, Verge offers a solution.
Okay, now let's talk HBAR, the token for the Hedera Hashgraph Network. This one's less about privacy and more about speed, right?
Yeah, HBR is all about performance. The Hedera network is super fast, very scalable, and really secure, all thanks to its consensus mechanism. It's called Gossip About Gossip.
Gossip about gossip, huh?
Yeah, it's unique. Unlike traditional blockchains that use mining, Hedera uses this rapid communication protocol to reach consensus. Lets it handle a ton of transactions per second.
So it's built for volume, perfect for things like micropayments, supply chain tracking, anything that needs to process lots of transactions quickly.
Exactly. And it's not just speed. It's also super secure thanks to its ABFT algorithm that stands for Asynchronous Byzantine Fault Tolerance. Make sure the network can handle attacks and stay safe.
That's reassuring. Security is a big concern in the crypto world. And it seems like HBR's got some serious backing. Google, IBM, Boeing, they're all part of its governance council.
That's right. Having those big names involved, it adds credibility and stability, shows they see the potential in Hedera.
So we've got DAesh focused on privacy and ease of use, XVG going all in on anonymity, and HBRR built for speed and scalability. It's a testament to the creativity in the crypto world.
Absolutely. And remember, this is just a small sample. There's so much more out there. New coins, new platforms popping up all the time, each one with its own unique potential.
It's exciting, but it can also be overwhelming for someone just starting out. What advice would you give them? What are the key things to keep in mind?
Well, first things first, educate yourself. Take some time to learn about blockchain, the different types of cryptocurrencies. Understand the risks. Don't just jump in blindly because someone told you about a hot new coin.
Solid advice. It's easy to get caught up in the hype, especially when you see stories about people making a killing overnight. But crypto is still a young market. It's volatile. There are risks. Gotta be smart. Think long term.
Exactly, and don't underestimate security. Use trusted platforms, protect your digital assets, strong passwords, two-factor authentication, hardware wallets, those are all crucial.
Yeah, security can't be overstated. One mistake and you could lose everything to hackers. And remember, the crypto world is constantly changing. Regulations shift, new technologies emerge. The market never stands still. Staying informed is key.
Couldn't agree more. And honestly, the most important thing, don't be afraid to ask questions. There's a great crypto community out there, people passionate about this tech, happy to share what they know.
It's a community that's all about collaboration and learning. Great place to connect, get advice, stay updated.
So yeah, embrace the learning process, connect with the community, and most importantly, approach crypto with a sense of curiosity. It's a journey with its ups and downs, but it's a journey that's just beginning.
Well said. And to our listeners, thank you for joining us on this deep dive into the crypto world. We hope you found it insightful, maybe sparked your curiosity, and gave you the knowledge to navigate this exciting space. Until next time, keep exploring, keep learning, and keep on diving deep.